Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, guys. Let's have a look at a few charts. But it's mostly repeating what I've already said, so no need to go into too much detail. For now, based on the data points, price is close to an area where it has historically formed bottoms, price-wise. It's an area, not an exact level, so price can still move lower or revisit this level later, for example on a higher low or even a retest of the lows. It doesn't have to happen. Also, keep in mind this is based on price structure, not full bear market drawdowns. A typical 70 to 80% bear market drawdown would be much lower, and the first time it went far below this data point. So based on that, I go level by level and treat this area as a stage where price can move higher. For confirmation, I also use some tools. One of them is the crown tool, which historically has only triggered near bear market bottoms. Then we have the production cost, which has already been hit. Below that, we have the power low and other metrics. As an extra confluence, another signal is flashing that comes with strong statistical backing. MI's 70% chance price does not trade below the last low, 85% chance of forming an SFP if price reaches that level, 95% chance of making a new all-time high before closing below that level. Of course, statistics work both ways. Low probability events can happen. But I don't base my strategy on those. Otherwise, I would miss all the higher probability trades that have worked well in the past. So this leads me to the conclusion that this range has a higher probability of breaking to the upside or forming a bottom structure where price may still retest the lows. That's also one of the reasons why I've been buying spot within this range. I'll continue buying either on lower prices or on a confirmed breakout. For me, this area offers strong confluence, data levels, statistical backing, and multiple tools triggering signals. That's basically it for the higher time frame. For now, it looks good. I'd be fine with lower prices, but I can't assign a high probability to that scenario based on the current signals. This is, of course, not financial advice. Always do your own research. You can also join the Patreon, where I'll soon be sharing these stats so you can use them yourself or even build your own signals from them. This is our weekly time frame with the SR level we've been watching. Last time, we were looking at this level for either a break above or a rejection and a move back down into the range. Price rejected, and we saw a rotation back into this area. For now, nothing has really changed. We are still in the curve for a potential bottom formation based on the 202-day cycle. I'm watching the same level. For a breakout, we need to see a move above it. Since we made a new high here, it's now easier to define. Price needs to close above the previous high. At that point, I would aim for the next higher areas. On the downside, if price breaks below this level, then I will aim for lower levels. So nothing has changed. The move down played out, and now I'm waiting. Momentum-wise, we can see that it crossed up and remains up as long as Bitcoin closes above 67K this week. That is basically the low structure that has formed here. Until then, momentum is slowly but steadily trending upward. However, for a strong confirmation, we need price to break above the range high. That could trigger a nice squeeze. Until then, it's patience mode within this range. Now let's switch through the momentum and the time frames. On the daily, we have bullish divergence, and it remains valid as long as Bitcoin closes above 64K. The 3-day time frame is also up as long as Bitcoin holds around 66 to 67K, which is more or less the last low area that has formed. The daily momentum is currently crossed down, but we need to observe the daily close. For momentum to cross up again, price needs to close above 71.2K, which is roughly where price is now. Since we are near the range highs, we either see a clean breakout or a rejection, and a move back into the range. This can be used as confluence. Just another piece of the puzzle. It can always move up or down, but based on our trading plan, we add these puzzle pieces to build a bigger picture for our trades. Now, looking at the 12-hour time frame, it looks quite good. It needs a close above 67K to remain bullish. I say momentum bullish because price can still chop around while momentum rises. Best case is that price and momentum move together, giving us an impulsive move up. If that doesn't happen, momentum can rise while price stalls, and then momentum flips. If you see weakness on the chart at that point, it becomes confluence for a move down. For now, the 12-hour remains bullish. The 6-hour is already quite high while price hasn't moved much. So now we wait and see if we get another push higher. Then we check if that push can actually break the level or not. For now, momentum here is also up. The 4-hour is a bit choppy and flip-flopping. It needs a close above the current high to remain bullish. Right now, it's more in decision mode and not very useful. The 1-hour is in an extreme zone and shows bearish divergence. However, the higher time frames are not supporting that for now, so the 1-hour can still move higher and momentum can stay flat. It's not very useful for me at the moment because the higher time frames remain strong and price is not at my short entry area. Yes, the 1-hour could lead to a move lower, but ideally, I would want to see the higher time frames starting to shift down as well, with the lower time frames aligning, for example, a bearish retest on the 1-hour. That would give proper confluence. For now, it's not there yet. Based on the higher time frames, it actually suggests another attempt to push into the highs. I can be wrong, of course, but I'm not missing anything since price is not in my area of interest for shorts anyway. Now let's move on to the next chart, the range and monthly stats. So here we have a simple range we've been looking at. Price hit the first area of support, not exactly the mid-range, but still a level, and I traded that long from this area. Of course, I would prefer a bit lower, closer to the mid-range or even lower levels for another long. However, if price moves higher, I already have some nice runners from the lows, both leverage longs and spot, so upside is not a problem at all. It becomes more tricky on the short side. For now, price is making higher highs and higher lows, so there's nothing really stopping it from pushing for another high. I was looking at the monthly statistics to see how likely it is that we get a new high. Based on the average timing for highs and lows, I said that I don't expect a new high or low this month. Most likely, it will continue to range. Of course, I can be wrong, but for now, I just follow the data. If a new high or low happens, I adapt and adjust the plan. Until then, I stick to this expectation. So what this means is that I'm potentially looking for another short from the range highs, or, in my case, adding to the short, since I already have one from this area. The next step would be price moving back into the range and hitting the next support level, where I would again look for longs. That would be the yearly fib time area and the daily cycle time window. So if we get another move lower, that's the time window where I would like to take another long. This is also the time window where I expect this range to eventually break. Bears want it to break lower. Bulls want to break out to the upside. For me, as I mentioned before, I currently see a higher probability for this range to break upward. But I would also be fine with a retest. I'm open to trading each of these levels if setups form. If price does not break higher and statistically hits the average timing for the high, then I'm looking for another short, similar to last time, which would basically be a bearish retest. Also, keep in mind, the month is coming to an end. Just because I don't expect a new high this month doesn't mean price can't chop around and then open the door next month for a new monthly high or low. At the moment, I'm also waiting for the monthly close. Then we can look at what the stats say for April. Based on historical data, April has about a 66% chance to close positive. More interesting for us are the average moves, around plus 22% upside potential, around 7 to 8% drawdown. That means if price closes around here, a 20% move up would bring Bitcoin into the 80K plus area, which would be a clear breakout of this range. Whether we retest the lows afterward remains to be seen, but the stats suggest such a move is possible. On the downside, a 7-8% drawdown would bring price back to the mid-range. So overall, I would be happy if the month closes around here, as that would align well with our confluence. But we still need to wait. Price can close higher or lower. Time-wise, we can see that lows are typically formed in the first 2 weeks of the month. If we combine that with our yearly fib time and daily cycle window, it aligns very well. Slightly earlier, but within that same zone. Best case scenario for me would be price moves lower into that time window, hits our levels of interest, I add new longs or add to existing ones. Then we see a move higher. That would bring all the puzzle pieces together at the right time. This is not a prediction. I don't predict moves far in advance. I define scenarios I want to trade, and only when price reaches my levels do I take a directional bias, because that's when I can manage risk and execute either a long or short. All right, I hope this part is clear. Now let's switch to the local levels and trade. I won't go over all the trades I had here, as they were all updated in the groups. The last few trades included a failed long that shifted into a short, where we took some TPs on the way down. Then price hit a level where I took another long, which I also shared. I've already taken profits on that long, a bit more aggressively, because I already have other longs, and this area is not the main level I'm targeting. So basically, I'm just taking trades inside this range in a more relaxed mode while waiting for the key levels. For today, I'm looking to hit the next TP on the long at 72K. That's also where the average gain for today is, and it lines up with the bearish retest area of the previous move down. So either I get a short setup there, or price continues higher while I keep my long runners. That means I'm not looking for new longs here. Those were taken from the lower levels. Here, I'm only looking for a short or no trade at all. For a short or adding to my position, I want to see price move above this level and then start losing it. Best case with divergence and some structure breaks. If that setup isn't given, I simply wait. If the trade sets up, but price only reacts briefly and then moves higher, so be it. That's part of trading. For now, this is a reaction area where I take some profits on longs, keep runners in case we break higher, but also watch for weakness to add to shorts and trade it back down, ideally into the mid-range and the yearly fib time daily cycle window. That's the plan for now. No rush, no FOMO. Spot has been accumulated in this range, some long runners remain intact, and I'm looking for a short if the setup is there. We'll see where price takes us. I hope that was helpful. By the way, if you want to build your own strategy or learn how to journal your trades properly, you're welcome to join. That's what I share. Over time, this will turn into a bigger video series, and most likely access will become limited once I reach my goal. For now, there are still spots available. Once the limit is reached, I'll close it for new members. I think you can already improve just from this video and by understanding how a strategy can be structured and executed. All right, that's it for now. I hope this was informative. Have a great day and see you in the next one.